Although investing can be a great way to gradually increase your wealth and secure your financial future, it can also be daunting if you're just getting started. Warren Buffett. Warren Buffett built all his wealth from investing. When Warren Buffett began investing in 1942, he had just $114.75 and purchased 3 shares of Citi Services preferred stock at a price of about $38 each. Within a few weeks, the stock's value had fallen to $27, but he kept the stock, selling it for $40 later that year. At the age of 14, he had about $1,000 saved up for investments. Warren Buffett's net worth in early 2023 is currently over $100 billion, and he's the chairman of Berkshire Hathaway, a U.S. holding company with a market cap of over $700 billion as of early 2023. So here you are with your first $10,000. Do you invest it, or do you allow it to become a burning hole in your pocket? Even though this amount of money might not seem significant for very large purchases, with careful long-term investing, you could still develop it into a very nice little nest egg like Buffett did. We'll show you how to invest your first $10,000 and position yourself for long-term financial success in this video, and also reveal Warren Buffett's investment secret to you. So, let's get started. But before we get into your first $10,000, if you like our cutting-edge investment content curated by professionals with decades of entrepreneurial and investing experience, consider subscribing to our channel and join in on our alerts so you never miss our new content. One of the things that must be considered is to buy stocks. Warren Buffett's approach to investing involves finding a small, high-quality company with strong fundamentals and holding them for the long term. In fact, Warren says often that when he makes an investment, he always hopes that he never has to sell it. He thinks that by doing this, investors can benefit from the long-term wealth-building potential of compound interest. Berkshire Hathaway is the holding company Warren has owned for more than 50 years, during which time the stock has increased from $7 per share to over $400,000 per share, largely as a result of the power of compound interest. The compound effect is the principle of reaping huge rewards from a series of small, smart choices. Buffett became a millionaire when he was 32 years old in 1962. But 99% of his current net worth was acquired after he was 50, proving that he had been a superb investor since he was 24 years old, and that he continued to make money off of his investments well into his 80s and 90s. His net worth increased by $2.4 billion from when he was 56 to $3.8 billion at the age of 59. This demonstrates that he has gained more in just 3 years than he had in his entire 56-year life prior to this. He also experienced a $30 billion net worth growth between his years of 83 and 91, which indicates that he gained approximately $4 billion on average per year during that time, or more than he would have throughout the previous 59 years put together. Coca-Cola is one of Buffett's most well-known investments. He made a $1 billion investment in the business in 1988, which was around 6.2% of his overall portfolio at the time. Today, compound interest has played a significant role in the value of that investment, which is now worth over $20 billion, and he received $704 million in dividends in just 2022 from this original investment. Buffett has kept the stock for more than 30 years while reinvesting the income. Compound interest is a strong financial concept that enables you to earn interest on both your initial investment and the interest that has already occurred in that investment. This implies that if you leave your money invested for a long time, your investment will rise exponentially. To better understand compound interest, let's use an example. If you invest $10,000 at 5% annual interest rates, you will earn $500 in interest in the first year, bringing your total balance to $10,500. In the second year, you'll earn 5% interest on your initial $10,000 as well as the additional $500 earned as interest in the first year. This will result in $525 in interest in the second year, bringing your total balance to $11,025. Compound interest has tremendous power since it can grow your money over time. Your returns will increase when your money is invested for a longer period and with a higher rate due to compound interest. For instance, your original $10,000 investment will be worth $662,117.72, assuming a 15% annual interest rate, and you allow it to compound for 30 years. Your initial $10,000 will be worth $40,455.58 at the end of 10 years. Then it'll accumulate to $163,665.37 by the end of 20 years, and $662,117.72 in total after these 30 years of compounding. So, what should you do with your first $10,000? Find a way to invest in something that you would never want to sell and has the potential to compound at 15% annually. Probably not easy, but as you can see, it is possible. For long-term wealth accumulation, compound interest is a potent weapon. By starting your $10,000 investments early and allowing your money to grow over time, you can achieve your financial objectives nearly effortlessly. Thanks for watching. Tell us what you think is the best way to invest your first $10,000 is by leaving a comment in the comment section below. If you like our cutting-edge investment content curated by professionals with decades of investing experience, remember to like this video, subscribe to our channel, and join in on our alerts so you never miss out on our new content. Oh, and check out our other popular video